Hello traders, Gary Wagner here. Approximately 12 o'clock in Honolulu, 5 o'clock in New York on Thursday, 16th day of December, 2021. And this is the daily report for gold and silver. After yesterday's conclusion of the December FOMC meeting and Powell took the podium, so to speak, we saw gold come off of the lows and trade up substantially higher, even though it closed slightly negative on the day when compared to the open of the day. Today, it had extremely strong follow-through, with gold basis February at $1,800.40. Silver truly had a very strong rally today, gaining about 4.5%. That's a 96-cent gain, with silver futures currently fixed at $22.51. Now, both gold and silver had some of their strength provided by pretty strong tailwinds from a weaker dollar, down a little bit over 0.5%, a decline of 51 points, with the dollar index currently fixed at 95.97. To me, the most surprising moment of yesterday's conclusion of the FOMC meeting is how strongly gold reacted once Chairman Powell held his press conference. This is a 5-minute line chart. We've notated exactly when he began to speak, and in essence, during his speech, we saw gold rise in a parabolic manner. And then we had magnificent follow-through going out throughout today, with gold currently fixed just at its current level of resistance at $1,800. While I'm disappointed that we moved the stop and that stop was hit, I believe that if it's truly the beginning of a rally, we'll have to see if it breaks above 1,800 for confirmation, or if we can buy it on a dip, seeing the market backtrack a little bit. But in either case, I believe there's plenty of dollars still available on the table for the taking. We want to watch how it reacts, specifically tomorrow and then going into Monday and Tuesday. As I spoke about in our opening letter today, I see some very, very strong similarities to how the November FOMC meeting ended and how the December FOMC meeting ended. The first similarity is that on both concluding days, this being November the 3rd, the November meeting, and this being the December meeting, we did get a red candle. That means that it closed below its open. It also closed below the previous day's close, as you can see here, as well as here. Although yesterday we had a much smaller body, we did get a more exaggerated low and high in terms of a range, compared to what we saw on the 3rd, was that it opened near the high and closed near the low. However, when we look at the following day, on both occasions, first of all, they were large green candles. They both hit 1,800. The key difference is that it closed below 1,800. In other words, it backed off of the high of the day, where in today's trading, it closed right around the high and continues to flirt with $1,800. Now, history doesn't necessitate that it will repeat itself, but if we see a similar kind of rally that we got following the last FOMC meeting, we saw gold run for a solid 2 weeks, trading from a low of 1758 to a high of 1879. And what we do want to see is confirmation. In other words, a follow-through tomorrow. I would like to see an effective close above 1805, or if at all possible, I would be more comfortable buying it on a pullback, whether it is 84 or as low as this particular line, which is the original resistance line that effectively is now a support line. In other words, what I'm trying to say is we are still long GLD, but I do want to position ourselves if we believe that this is going to be a sustained rally going on through the end of the year. When we look at a 3-line break chart, it absolutely defines a true and utter breakout to the upside. You can see that colored in magenta. And because today's breakout to trade just above $1,800 is a little bit different than what we saw after the November meeting, because we truly had a sideways market and then a couple of down days before we had this breakout. I have changed the projection from magenta to a dark blue to make it much more visible. We can see how it is broken above this former support line that became resistance once the market broke through it. And we are now just butt up against that level that I talked about over the last couple of weeks, the band between the 61.8% fib retracement at about 1805 and 1800, where we are currently trading at. We are looking at a daily candlestick chart of the dollar index. We had a sizable drop today, down approximately 0.5%. But what is most interesting is yesterday's candle was a doji almost in the star position. For that to occur, we would have needed this body right here, this very, very tiny red line, to be at or just above the closing price of the prior candle. But nonetheless, we do have a doji. That is our pivotal candle right here. Now, we had a strong follow-through down day. Support really doesn't come in for the dollar index till about 94.70. Lastly, I do want to take a look at silver. Phenomenal move today, up 4.5%. We have one basic fib retracement, which begins at these highs at about $28.82 to the lows that occurred back at the beginning of October at approximately $21.40. That is obviously the point in which we found a double bottom when we compare these two lows. This is definitely a strong upside move, and I see no resistance in silver until about 23.05. We have multiple historical reference points to indicate that this was a strong area of support here, a strong area of support as well here. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the weekly wrap-up and review. Bye-bye.